100% you should have growth stock mutual funds in your investment strategy. Let me explain why. To get the biggest bang for your buck, Dave Ramsey suggests that you should invest in good growth stock mutual funds. But what does that mean? Growth stocks are shares of businesses with a greater potential for future earnings beyond the overall stock market. So, what is a growth stock mutual fund? Well, as the name suggests, it consists of a collection of growth stocks, meaning that instead of you picking out one by one each stock that you want to invest in, you're going to have little pieces of these growth stock businesses in a larger collection so that you remain diversified. You will often find tech companies in growth stock mutual funds. But why is that? It's because even though they are valued high, they're still going to see greater potential earnings in a flourishing market. So, question for today's video. Do you own shares of a growth stock? Do you know? Make sure to leave me your answer in the comment section below. I'd love to hear from you. Now, if you are already getting value out of today's video, go ahead and smash that like button below. I would greatly appreciate it. And it also lets me know that you enjoy content just like this, so I know to make it in the future. But if you are brand new to Dollar for Dollar and you are joining for the very first time, I just want to take a moment to say thank you. My name is Heather. Here on this channel, my goal is to give you personal finance tips and tricks to help you along your journey to financial freedom. And if financial freedom is what you are after, please consider subscribing. So hit that button below and hit that bell so you're notified when I do post in the future, because the best part is this comes at no cost to you. It is absolutely free to subscribe. So while you'll find tech companies and growth stock mutual funds, there's also another type of company, another type of stock that you will often find as well. And those are called consumer cyclical stocks. Consumer cyclical stocks, that's just a fancy way of saying that these are businesses that provide a service that they deem to be completely unnecessary or an extra, like a luxury. So think things like your entertainment industry, for example. So Netflix, even though I know many of you would totally disagree that that's an extra and that is a must in your life, Netflix is not a must, and it actually is considered a consumer cyclical stock. Another type of stock that you will often find would be things in the hospitality industry. So think hotels like Marriott or Hilton. Those also are considered consumer cyclical stocks. So let's get into the meat and potatoes of why growth stock mutual funds are a great anchor for your investment portfolio, okay? Especially if you're looking at a long-term strategy. One thing to note about growth stock mutual funds, when you do it well, is that you're going to very likely outperform the actual market over time, okay? So let's just use a very easy benchmark. Let's say year over year, we do a comparison over the last 30 years, and you're going to see about a 10% return on average when you're invested in the stock market, okay? And again, we're just benchmarking for easy numbers. Well, if you're going to get 10% as a normal investor, which is pretty good actually, then consider this. Growth stock mutual funds over time, which are deemed more likely to outperform the stock market, are going to see earnings beyond 10%, okay? You might see 12%. You might see 15%. Who knows? It depends on the year. There is one thing, however, to keep in mind with a growth stock mutual fund that's not so great. When the economy is really strong and the stock market is seeing a really big uptick and it's flourishing, growth stock mutual funds are your best friend, okay? This is when they really excel and really outperform your typical stocks. However, in a bear market, when there's a downturn, these are more likely to take a hit than your average stocks, your average companies. So you're going to see a greater loss. And that is why Investing for retirement is a long-term strategy. It is not a get rich quick, I'll invest for a few years, I'll retire a millionaire, okay? And that's also why growth stock mutual funds are best for investors who can spend at least 10 years invested in them, okay? 10 years or more, and ideally much more. So, if you are not willing to spend at least a decade invested in growth stock mutual funds, these are probably not the option for you. So how do you decide, or how do you decipher really, what companies would be considered a growth stock? Well, a majority of the time they're going to be younger companies that are flourishing in an industry where the ceiling is extremely high. That is why a lot of times growth stocks are in the tech industry, because they're relatively new. There's still a lot of unknown there, and they have not reached their full potential. They have not matured as a stock, as a company. Now, if you currently have an investment account, chances are that your investment firm has growth stock mutual funds, and they're usually easier to pick out because, not always, they will use the word growth in them so that you can spot them quickly. However, that is not always the case, and something you also want to keep in mind is there are different types of growth stock mutual funds, okay? They can range from small cap, which means they're focusing on smaller businesses, to large cap, which are also called blue chip companies, and those are going to be your really large companies. Think something like an Amazon or a Facebook. Those are large cap stocks. Now, like I mentioned, most investment firms will use the word growth in their mutual fund name so that you can pick them out. However, there are chances that you're looking at some mutual funds that are growth stocks and you don't even realize it. So I'll give you two examples. Fidelity, for example, while they have several options, one in particular that would stand out, and one you should definitely look into if you are invested with Fidelity, is the Fidelity Contra Fund. So even though Fidelity doesn't put the word growth in it, it is in fact a growth stock mutual fund. The same thing goes with John Hancock. They have several to choose from, of course, but one growth stock mutual fund that they have is called the John Hancock Funds 2 Mid Cap Stock Fund Class 1. Did you get that? No growth in that name whatsoever. However, fun fact, that mutual fund alone has seen a return over the last 3 years of 30.1%. And if you're not really familiar with like what that means, and that's like jargon to you, that's a really good mutual fund. So if you have John Hancock, I definitely suggest you look into that one for your investment portfolio. So based on the definition of growth stock mutual fund, you're probably well aware at this point that Amazon, the world's largest online retailer, is a growth stock, because at the end of the day, Amazon hasn't been around all that long and they have not matured totally as a company. You may think, oh my gosh, how much bigger can they get? But they can get bigger. And that is why most mutual fund managers who are managing growth stock mutual funds are going to be including Amazon in that mixture. So if you have any sort of large cap growth stock mutual fund, very likely that you actually have a piece of Amazon in that portfolio. And if you want to better understand how the stock market is measured year over year, definitely look into something called market index funds or market indexes. And I actually did a video on the S&P 500 and the NASDAQ, so I will make sure to link those below and put them in a card here for you. But those are also great things to look into for your portfolio as you're thinking about rounding it out. Those are going to give you some type of sturdy investment that actually just follows along with the overall market. Whereas growth stock mutual funds, again, when you do it really well, you're going to outperform those standard S&P 500 market index funds or your NASDAQ composite index funds, even though those are great solid options, especially if you are a more passive investor. Thank you so much for joining today. I really hope you enjoyed this video. If you did and you have not already, please give it a like. And again, don't forget to subscribe.